right. Good evening and welcome to CBX Business News for Monday, April 20, 2026. I'm Rashel Moncrieffe. Thanks for joining us. Coming up, Jamaica's opposition warns that the absence of an oil hedge leaves Jamaica exposed to price shocks as global energy volatility intensifies. Also ahead, the Inter-American Development Bank says Caribbean growth remains stalled at 1.4% as climate risks continue to drag on performance. And later, WTI crude oil jumps 5% to $88 a barrel after a US-Iran clash disrupts a key shipping route, raising fresh supply concerns. Stay with us as we unpack these stories and more right after the break.
Caribbean Flavors and Fragrances Limited has been a part of Jamaica's manufacturing landscape for over 20 years. By crafting unique flavors and fragrances, we have become a part of your favorite household and food items such as beverages, ice cream, household cleaners, and much more. Known throughout the Caribbean for the highest quality, we continue to innovate with strong leadership, a dedicated team with integrity. We go the extra mile for our customers. Create the next taste sensation. Contact us at 876-923-5111 or visit our website, Facebook, Instagram, or LinkedIn pages.
The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, tease the senses, and Pulse Investments. Welcome back to CBX Business News. We begin with what has been described as a critical gap in Jamaica's economic defenses. Jamaica is now entering a period of elevated oil prices without one of its most important financial safeguards. Speaking during a recent dialogue in Westmoreland, opposition leader Mark Golding says the Holness-led administration's discontinuation of the oil hedging program, a mechanism designed to shield the economy from sharp increases in global energy prices, has left the country exposed to rising oil prices.
There was a tax that was put in place in 2015 on fuel dedicated to financing an oil hedging program. That's a technical word, but essentially what it was to provide the resources so that Jamaica could purchase insurance in the international financial markets, that if the price of oil went above an amount, whatever price we chose, as the price above which we can't absorb that on our own, we would be entitled to a payment from whoever we bought that insurance from. That was a way of protecting the country from shocks which result in the spike in the price of oil. After 2016, when the government changed, the new government did not think that that was necessary. And so they abandoned the oil hedging program.
According to Golding, without hedging, Jamaica is now fully exposed to oil price volatility with no financial cushion to absorb sudden increases.
Jamaica had done 4 hedging contracts up to that point. When those matured, they didn't renew them, but they kept the tax. So we are still paying that tax up to today, though the purpose for which that tax was put in place is not being fulfilled. And of course, had we maintained it, we would have the benefit of it now when the price has gone up to $100 or whatever it is per barrel. There's no protection for Jamaica now. We're going to absorb the full brunt of the movement in prices.
That was Jamaica's opposition leader, Mark Golding. Meanwhile, Jamaica is pivoting its economic growth strategy towards high-value services, with the National Commercial Bank Jamaica's NCBJ expanded $2 billion SME Growth Fund, positioned as a key financing tool to drive that transition. Speaking at the recent launch of the facility, Minister of Industry, Investment and Commerce, Senator Aubin Hill, called for a clear shift away from competing in large-scale manufacturing, arguing that Jamaica's size limits its ability to rival major production economies.
You have to make sure you finance services. We are not going to be a manufacturing nation to take on not even Colombia with 50 million people, never mind 1.3 in China, 1.3 billion in China. So we're going to have to do services. But Singapore is rich. They have 5 million people. Luxembourg, okay, and Liechtenstein fight for #1 position in the per capita GDP table, 150 odd. We're at 7. Luxembourg, tiny so. Okay? So you don't have to have a huge population. You have to have good, smart population. Therefore, a good part of, while you do the manufacturing financing, you have to look at services.
At the same time, he highlighted Jamaica's small domestic market as a key constraint on long-term economic growth.
We have just under 3 million people. Our per capita GDP is 7,000, thereabouts. There is no way we can become a rich country selling to just 3 million people with a per capita GDP of $7,000. It can't work. Barbados has about 22. Trinidad has about 25. What are we doing here?
That was Jamaica's Minister of Industry, Investment and Commerce, Senator Aubin Hill. And a potential shift is emerging in how credit flows through Jamaica's financial system as Qantas Advantage positions securitization as a tool to reduce lending risk and unlock more financing across the economy. Speaking on Friday during the company's IPO press briefing, CEO Dr. Adrian Stokes outlined how Qantas leverages securitized assets to recycle capital and generate real cash returns.
At the end of each year, you're going to see us with a lot of cash. That's how we manage a business. So if you compare us to another financing entity, you will see them not having as much cash as we do, for one major reason. So one part of the portfolio, as I indicated before, we hold it to maturity. So when we do a loan, for example, we keep that on the balance sheet, usually for a very long time. On the securitized asset component, we churn that part of the balance sheet. So we're always getting back into cash from that part of the balance sheet, especially at the end of the financial year.
The company says its ability to pay out up to 90% of earnings in dividends annually is rooted in how it structures and monetizes its assets.
That's one of the reasons why we pay a lot of dividends, because at the end of the year, we generate our returns. Our returns are actual cash, real cash. Returns are not sitting in some unrealized gains in some asset and so on, but it's actual cash, it's real cash that we return to our shareholders. So that just gave you just one of the secrets to the business.
That was CEO of Qantas Advantage, Dr. Adrian Stokes. In financial news, Cygnus Real Estate Finance, SRF, is reinforcing its long-term investment case, reporting growth in shareholder capital to 8.88 billion Jamaican dollars, up from $5.1 billion, delivering significant returns. Speaking during the Q2 earnings call recently, Vice President for Investment Management, Justine Powell, says the performance comes even as the fund navigates short-term earnings pressure, underscoring what it describes as value creation across its full investment cycle rather than quarter-to-quarter results.
Shareholders would have paid in capital amounting to 5.1 billion Jamaican dollars for SRF. So that's what we're seeing on the left. And since receiving that paid-in capital, we have transformed the shareholders' value to $8.88 billion. And to go a little bit further, SRF has about 17.3 billion in total assets. So when we look at those assets on the balance sheet and account for all the liabilities of SRF, what is left, of course, is for our shareholders, and it's 8.88 billion.
That was Cygnus Vice President for Investment Management, Justine Powell. We move to the latest updates from the JSE equities. In Monday's trading session, the JSE market activity resulted in the trading of 107 stocks, of which 34 advanced, 42 declined, and 31 traded firm. Leading the winners are Express Catering, NCB Financial Group, Proven Group USD, and G West Corporation ordinary shares, while leading the losers are Epley 7.25% preference shares, 138 Student Living Jamaica, Productive Business Solution USD ordinary shares, and General Accident Insurance Company JA. The main index advanced by 2,376.90 points to close at 340,494.19 points. The junior market index declined by 14.07 points to close at 3,226.55 points. It's time for the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. In today's Market Education feature, we're looking at the term tax threshold. In Jamaica, the tax threshold is the minimum annual income a person must earn before paying income tax. It represents the portion of income that is exempt, meaning individuals earning below this level do not pay income tax, while those above it are taxed only on the amount that exceeds the threshold. This system helps ease the burden on lower income earners and supports a fairer approach to taxation based on a person's ability to pay. That was the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. And that's it for the local news segment. Please stay with us. The regional news is up next. The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, Tease the Senses, and Pulse Investments.
This project marks the celebration of our 30th Hall of Fame and aims to highlight the achievements, challenges, and invaluable lessons of those who have shaped and are shaping the future of our economy. Our aim is to celebrate the voices and stories of 30 remarkable leaders in Jamaica's private sector. Join us as we explore these narratives of resilience, leadership, and vision.
It's feeling so good right now. Feeling so good right now. Yeah, yeah. It's feeling so good right now. Feeling so good right now. Yeah, yeah. It's feeling so good right now. Don't never ever ever wanna calm down. No, no, no. Yeah, yeah.
Welcome back. And now for the regional business news. The Inter-American Development Bank, IDB, and the Organization for Economic Cooperation and Development, OECD, are urging Caribbean governments to scale up investment and build resilience to unlock long-term growth. In their latest Caribbean Development Dynamics 2026 report, the institutions say while the region benefits from strong natural and human capital, it remains constrained by high debt, low productivity, and deep exposure to climate shocks. It notes that economic expansion continues to lag, with potential GDP per capita growth projected at just 1.4%, trailing more advanced economies. The report also flags escalating climate risks, with extreme weather events driving average annual damages of more than 2% of GDP. While investment has improved, reaching about 28% of GDP in 2023, much of it is short-term or externally financed and still falls short of what is needed to drive sustained development. The report is now calling for a shift to an investment-led model focused on resilient infrastructure, digital transformation, and high-value sectors like renewable energy and the blue economy. It also underscores the need for stronger regional cooperation and innovative financing, including climate-focused debt instruments and public-private partnerships to close persistent funding gaps. And from long-term strategy, we move to immediate disaster readiness. The Caribbean Development Bank, CDB, has approved a $346,000 grant to strengthen regional disaster response capacity through support for the Caribbean Disaster Emergency Management Agency, CDEMA. In a recent statement, the bank says the funding, backed by the European Union, EU, will finance a comprehensive institutional review of CDEMA. The assessment will examine the agency's structure, staffing, and operations, with recommendations aimed at improving efficiency and long-term sustainability. The move comes as climate change drives more frequent and intense natural hazard, placing greater strain on regional response systems. The initiative forms part of the Caribbean Action for Resilience Enhancement CARE program, which forms part of a broader EU-supported effort to boost disaster risk management across vulnerable states. The project is set to begin in May, with findings expected to guide future reforms and strengthen disaster preparedness across CARICOM member states. And in Guyana, a new economic frontier is emerging, not in oil, but in healthcare. Guyana is positioning medical services as a new driver of growth, with President Dr. Irfan Ali outlining plans to develop the country into a regional hub for medical tourism. Speaking at the opening of the Optique Private Eye Hospital on Friday, the president says the initiative forms part of a broader care economy strategy aimed at generating economic value and new revenue streams. He says expanding healthcare capacity will not only improve local access, but also attract patients from across the Caribbean and beyond.
Guyana wants to become a prime destination for medical tourism. We want our country to be known not only for its natural beauty, its energy potential, and its economic growth, but also for excellence in healthcare services. We want people from across the Caribbean, from the diaspora, from North America and beyond, to look to Guyana as a place where they can receive high-quality, affordable, efficient, modern medical care.
Ali notes that the strategy is expected to generate spillover effects, driving activity in hospitality, transport, and other service industries while creating new jobs.
That is the multiplier effect of medical tourism. It creates economic opportunities, it generates employment, it stimulates investment, it earns foreign exchange, it builds new industries, and it creates wealth for the country. Most importantly, it can help raise standards for local citizens, as increased demand supports better facilities, stronger expertise, and more advanced technology available here at home.
That was Guyana's President, Dr. Irfan Ali. It's now time for news from the Trinidad and Tobago Stock Exchange. Overall market activity resulted from trading in 20 securities, of which 8 advanced, 4 declined, and 8 traded firm. Today's winners are A.S. Bradden & Sons Holdings, Trinidad and Tobago NGL, National Enterprises, and Angostura Holdings. While leading the losers are Eric Solis Marketing, Trinidad Cement, the West Indian Tobacco Company, and JMMB Group. Trading activity resulted in the following movements. The All TNT Index advanced by 16.13 points to close at 1,377.82. The Composite Index advanced by 8.96 points to close at 951.32. The Cross-Listed Index advanced by 0.17 points to close at 69.26. The SME Index declined by 0.16 points to close at 82.91. And we take a short break, but please do stay with us. The international news segment is up next.
Caribbean dreams, instant turmeric tea. What you put in is what you get out. What you put in is what you get out. Yeah. Build up your body, boost up your brain. Take on the world now. Say bye-bye pain. Caribbean dreams, instant turmeric tea. Be good to you. Caribbean dreams, instant turmeric tea. Distributed by Amalgamated Distributors Limited.
Welcome back. In international news, WTI crude oil futures surged more than 5% to about $88.80 per barrel on Monday, rebounding from an 11.5% drop in the previous session as tensions between the United States and Iran sharply escalated. The spike follows renewed attacks on commercial vessels in the Strait of Hormuz, a critical artery for global energy shipments. Over the weekend, U.S. forces seized an Iranian vessel after Tehran reportedly fired on ships and reasserted control over the strait, effectively shutting it down again while accusing Washington of breaching a ceasefire set to expire this week. Clashes intensified in the Gulf of Oman, with U.S. forces targeting another Iran-linked vessel as continued attacks brought maritime traffic close to a halt. U.S. President Donald Trump warned that further escalation is likely without a diplomatic breakthrough, though talks remain uncertain as Iran signals it may bypass planned negotiations in Pakistan. The standoff is raising fresh concerns about a worsening global energy crisis, given the disruption to one of the world's most vital oil transit corridors. And that supply shock is now feeding directly into global growth risks, starting with Europe. A new economic shock tied to rising Middle East tensions could significantly weaken Europe's growth outlook, according to the International Monetary Fund, IMF. Speaking at a press conference on Friday, IMF European Department Director Alfred Kammer says the conflict involving Iran could cut euro area output by about 0.5 percentage points over the next 2 years under a baseline scenario.
The impact of the Iran war will shave off over the next 2 years 0.5% of GDP on euro area growth. And we expect in a more severe scenario that could be as bad as shaving off 1.7 percentage points of GDP. So those are the markers. we have on the outlook.
Kammer says the euro area is entering a period of heightened uncertainty, but from a position of relative strength, giving policymakers some room to assess evolving risks. He urged the European Central Bank, ECB, to maintain a neutral stance while noting expectations for a cumulative 225 basis point increase in policy rates this year.
Our expectation is that the European Central Bank, and that is also our recommendation in the reference forecast, should stay with a neutral monetary policy stance, and that means we would see a 225 basis points increase in the policy rate in 2026, but that to some extent can be taken back in 2027. Of course, there's uncertainty on this, and we need to see over the next few months what scenario we are in, but that's the recommendation we have if the reference forecast would materialize.
That was IMF Director for the European Department, Alfred Kammer. Beyond Europe, the fallout is already showing up in real economic activity, particularly across Asia. India's infrastructure output contracted by 0.4% year-on-year in March 2026, reversing a revised 2.8% expansion in the previous month and marking its first decline since October. The slowdown reflects the early impact of the Middle East conflict, which has triggered energy shortages across Asia and pushed up petrochemical prices. Fertilizer production plunged 24.6% as firms struggled to secure natural gas feedstock. Output also declined for coal and crude oil, while steel and cement production remained resilient, supported by strong construction demand. And that's it for the international segment of the newscast. The news recap is coming up on the other side of the break.
If it were not for the Jamaica Stock Exchange listing, Phosphate Company Limited would not be where it's at today. I called them, they listened to my concerns and my fears, and they gave me the answers. All the fears I had about banks, about losing control, you are having them. And I tell you, they were dissipated when I spoke to the Jamaica Stock Exchange. This is one of the best decisions I have ever made in business. If you want to change the trajectory of your business and to grow, make that call today to the Jamaica Stock Exchange. You will be glad you did.
And now to recap our top stories. In the local news, Jamaica's opposition says the absence of an oil hedge leaves Jamaica exposed to shock. Regionally, IDB says Caribbean growth stuck at 1.4% amid climate risks. And internationally, oil jumps 5% to $88 as US-Iran clash shuts key shipping route. Those were the stories making today's CBX Evening News. On behalf of the entire production team, I'm Rashel Moncrieffe. Thanks for watching CBX, your region, your business, your source.